Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, May the 12th, the year's 2025. Let's talk trading. It's time for the weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. And a friendly reminder as we start this week off, have your risk management in place. Don't lose more than you're willing to lose on any one single trade or during any one single trading session. So if we take a look here, oh, wait a minute, let's look at the week. And as you can see here, there's a lot of gaps that haven't filled. There was some news last night on the U.S.-China tariff deal, and it has really caused some movement in the market. As you can see here, adding these two numbers together, we've got 159 pip range on the pound already. That's huge. And you can see here we broke out of the or broke through the weekly previous week's low, which is we went right through that previous week's wick zone. In fact, on this weekly open and gap, I had the computer on, and I noticed that the pound had gapped down, and then the spread was crazy. It was something like 7 to 10 pips. I was like, this isn't tradable. Then all of a sudden, for some strange reason, the spread narrowed to like 2.5, maybe 3 pips. And I'm thinking, huh. So I jumped in along, and the next thing I know, the spread went crazy again, but I was up almost 10 pips. So I just punched out, and on the next tick or two, it dropped right. It just took all those pips right back. So that's just one thing, you have to be quick, nimble, and you just take it. I mean, and if you're greedy, sure, if I would have stayed in that trade, I would have probably had the potential to make more money, but I would have had to ride it out for hours. And, it was just the luck of the draw that we had those tariffs placed there. But if you notice here, we still haven't quite closed that gap because we had a high of 32.99.3, but the close was actually 133.003. So we actually missed that just by a hair, but it's still a miss. And we are putting in the opening range for the week. Notice we dropped through that opening range for the month. We went inside and fell right back through it. For the year, we are now 692 pips above the yearly open. We're 241 off the high and 1,103 pips off the low. And you can see we're coming right back into the candle body of the previous month. And right here, we were in the wick zone, upper wick zone, and we're back. We fell through it. In fact, there was a trader out there in YouTube land that made a video and wanted me to reply. So I watched the video, I replied, and then they said something about I didn't want to have a discussion. It's like, well, I did what you asked and I did reply, but for some strange reason, they won't answer my question. So I'm not really sure what they're thinking. But, the thing about trading is I was playing with chat and I came up with this little info graphic. It's like you can win big, you can win small, you can lose small, and those three are acceptable. But the losing big, that's the one that can just take you right out of this game. And for some strange reason, people and traders just don't understand what's going on in trading. I was some of you may know if you've followed me for over a decade, that, or maybe if you've only followed me for a few years, know that I like Miatas. And when I was in Arizona, I had a Miata set up for the track. I used to take it to Phoenix International Raceway in Firebird, and I'd run around. It was a lot of fun. Well, there's a over on Prime. There is a series called First to the Finish, and it's about the MX5 quote unquote Miata series. And they were following this one team, and I think they had 5 drivers on the team, and 2 of them were women. And one of the things that they said about racing, the team owner, her and her husband, they run the team, and they said they were talking to the drivers that were getting discouraged. They go, look, when you're driving and racing, there's only one winner, and you're going to lose a lot more than you win. And, in trading, hopefully you don't lose more trades than you win. But to me, the point is that you're not going to win every trade. Walmart might have a day, and I might have a day where I don't have any losing trades. But I think I've got one loss today. But what happened was it went against me. I jumped in, and it went against me again. As soon as I could get out where I had a net profit, I did. So one was a won and one was a loss, but overall it was a net profit. And a lot of times that's psychological. We're managing our emotions as opposed to really managing the money. But um, I I wrote an indicator because I hesitated the first time when I could have gotten out and taken a pip, and I didn't, and then it went against me. So I wrote an indicator. I'm calling it TRO, get out. And you say if you're in, X number of trades, and mine set to greater, if it's I set to 1. If I'm in more than one trade, I want this thing to tell me to get out ASAP. And so that's what I did because, and what I mean by ASAP is as soon as I can take a small win, get out. Because what will happen is I'll either get out with a small profit, and that's okay, or I'll be stuck in the trade for a while, and then I'll wind up either losing small, and hopefully I don't let it go where it loses big. In other words, more than what I want it to lose. So anyway, so to that trader that put out the video, it's like, you know, you talk about, well, if you're R and R, if you're not making a 2 to 1 or whatever, or it's like that's not the way I trade, because as I pointed out in that my reply was, when I'm in a trade, my money is at risk. And so that's when I have to focus on the money, not so much what the chart tells me, because so long as I'm making pips, that's all that matters. So whether it's 1 pip, 0.5 pips, 5 points, I don't care. It's just, if I'm inching along, I'm inching along, because, if I get in enough trades, I take enough trades, sooner or later, I might get one where it gives me that a quick 5 or 10 pips, and I might be able to ride it for even more. But I'm looking at it as managing the money. I'm managing the risk, because I want to take risk off as soon as possible. I don't want my money at risk, because who knows, some tariff deal could be announced, and the sucker could move 50 pips against me, blow through us any stops that I may have set, and that just wouldn't be very good. So we're looking at the range chart now, and look at this 289 on dollar yen. It's up to 148. Somebody must have made some nice money there. And looking at the buy zone, you can see here on that news, it dropped right through that weekly open. So it's up here. Anybody had a pending order, they were rewarded nicely, very nicely. And green rats, because at this time, the red rats, this wasn't a rat zone, but here the green rats, That would have been very, very, very nice if you took this trade here back at 31.60. And you can see here it was at 31.40. That would have been a launch pad trade. But the one thing about launch pad trades, if it's below the daily open, you got to be careful. But on this big reaction, you can see there's the reaction, and now it's coming back. And it's possible we actually do get back to this open or this open, because these are both return bars. And as you can see here, we took out that monthly pivot. Bambino Flex said to go long. Pivot Trading Plan said to go short. And here at the pivot, if you went short 32.78, you were rewarded nicely. Very, very nicely. So we took out that daily pivot. We missed that weekly pivot, but we took out the monthly pivot. So we have one missed pivot here for the year 2 months ago. And we've got this week, we missed it 4 weeks ago. We missed one. 12 weeks ago, we missed one. And then years ago, we have some missed pivots. And on the daily. And I'm wondering if on some of these missed pivots, I was wondering if there wasn't enough data on the chart, but I think there's enough data on the chart. I think there's 5,000 bars worth of data. So, and this is only 3 years ago. So that's barely 1,000 days. Once again, it went right through that lower wick zone, and you can see here we've touched the previous or the daily previous day's low. A couple of times right here. And looking at the smart ranges for the week, so far 160 pips, 33 percentile, and we still got 4 days, 4.5 days almost left in the week. We did not break out at a high, but we broke 72 pips out of that low. So right now for the rats, high minus close 89, close minus low 70. For weekly crossover traders, 42 pips high minus open and 118 open minus low. Lots of movement there. Price action simple. You can see here crisscrossing that double O a few times. I traded that a couple of times before the video. You can see a 3-ball higher low trade there would have paid off. Lower high trade there paid off. Once again, just simple trades. Flip-flop box. Right here. I don't think I would have wanted to take a short on that particular flip-flop here. This is signaling long, but looks like you've got a lot of fight there. And if you took that trade in a blink of an eye, you could have had half a pip. Because this looks like a return bar, and there's a return bar, so it looks like price may want to come back down. And fellow traders, we're out of time. Just remember, never forget, it's not what you trade, it's how you trade it. Drain the banks, TheRumpledOne, over.